Stocks versus crypto, which will make you richer? Welcome to today's video. If you're someone who wants to build wealth, but feels torn between investing in traditional stocks or the buzzing world of cryptocurrency, you're in the right place. Both these asset classes have the potential to grow your money, but the big question is, which one is better for you? Why didn't my so-called investment advisors tell me the downside for these asset classes? They only inform what their aligned interests in each asset class they are promoting instead. So are stocks with their steady, proven projected returns better, or is it crypto with its reputation for explosive gains? By the end of this video, you'll have a better understanding of both and tools to decide which fits your financial strategy. Let's discuss now. Before we get into the comparison, let's take a moment to understand why investing is so important. Investing is essentially putting your money into something that can grow over time, making it work for you. Whether it's buying a share of a company or owning a piece of digital currency, the goal is the same: to secure your financial future and, of course, accumulate wealth. For beginners, navigating the world of investing can seem overwhelming, especially when faced with terms like dividends, blockchains, or market caps. But don't worry, today we'll break it all down in the simplest way possible. Let's start with stocks. What exactly are they? When you buy a share of a company, you're essentially buying a small piece of that company. If the business grows and prospers, the value of your share increases. Sometimes companies also pay dividends, basically a share of their profits to their investors. Stocks have stood the test of time and are known for building wealth slowly but steadily. Think about huge companies like Apple, Microsoft, or Amazon. People who invested in these companies years ago and held on to their stocks have seen tremendous returns. But stocks aren't completely risk-free. Stock prices can drop due to market crashes or poor performance of the company. Things like economic downturns, political events, or changes in consumer preferences can also affect their value. So while stocks are often seen as the safer choice, they can still be unpredictable. Now, let's talk about cryptocurrency, one of the most intriguing investments of the modern era. Cryptocurrencies, like Bitcoin and Ethereum, are digital currencies that exist on a system called blockchain. What makes them stand out is their decentralized nature. No government or central authority controls them. That appeals to a lot of people, especially those skeptical of traditional financial systems. The growth potential of cryptocurrencies is undeniable. For example, Bitcoin, which started at virtually zero, went on to hit highs of over $60,000 in just a decade. The promise of such high returns is why crypto is often called digital gold. However, that reward comes with significant risk. Crypto prices are highly volatile. They can swing up or down by huge percentages in just a matter of hours. Additionally, the market is still young and largely unregulated, meaning it's prone to scams and hacking incidents. If stocks are like riding a roller coaster, investing in crypto can feel more like skydiving without a parachute. When it comes to choosing where to invest, one of the first things to consider is stability. Stocks have a long history, which gives investors confidence. Over the years, the stock market has shown consistent long-term growth despite occasional crashes. For example, the S&P 500, an index that tracks the performance of the 500 biggest U.S. companies, has historically delivered average annual returns of about 8 to 10%. Cryptocurrency, however, is still the new kid on the block. There's no guarantee it will stick around in the long run. After all, technology evolves rapidly, and regulatory crackdowns or technological shifts could significantly change its future. In terms of stability, stocks have a clear edge. Next, let's talk about growth potential. Stocks are known for delivering steady returns over the years. An investment in a company like Apple 20 years ago would have multiplied your money many times over. While the growth isn't always spectacular, the trajectory for successful companies is often upwards over time. On the other hand, crypto has the allure of explosive growth. Bitcoin is the perfect example. Its price has skyrocketed, making some early investors incredibly wealthy. But these gains aren't guaranteed, and for every success story, there are tales of massive losses when the market turned. Risk is a critical factor in investing, and it's where the differences between stocks and crypto stand out the most. Stocks offer a level of predictability due to regulation and market maturity. When you invest in reputable companies, you can leverage tools like diversification to reduce your risk. For example, instead of putting all your money into one stock, you might buy a mix of different ones, or even invest in index funds that track the broader market. Crypto, however, is highly speculative. Prices are largely driven by market sentiment rather than fundamentals. This means that a social media trend or a single tweet can send prices soaring or crashing. The golden rule with crypto is to invest only what you can afford to lose, because there's no safety net. Getting started with investing in stocks is relatively straightforward. Thanks to online brokerage platforms, all you need is a bank account and a few dollars to buy your first stock. Most platforms even offer fractional shares, so you don't need a ton of money to get started. Crypto is also quite accessible, but it requires a little more technical know-how. You'll need to set up a digital wallet, pick a trustworthy exchange, and go through the process of buying and securely storing your assets. For beginners, this extra layer can feel intimidating. Here's the good news: you don't need to pick sides. In fact, a balanced investing strategy can include both stocks and crypto. Diversification is the key to managing risk and ensuring growth in your portfolio. For example, you could allocate 80% of your investments to stocks for stability and steady returns, and set aside 20% for crypto to explore higher risk, higher reward opportunities. This way, you benefit from the security of stocks while still tapping into crypto's potential upside. Before deciding how much you want to invest in either stocks or crypto, take a moment to assess your financial goals and risk tolerance. If you're saving for retirement or long-term goals, focusing on stocks might make more sense because of their consistent returns. If you can stomach volatility and are looking for dramatic short-term gains, then a small portion of your portfolio can go toward crypto. The key is to align your investments with your comfort level and financial aspirations. Let's clear the air about one of the biggest misconceptions around investing: the idea that you can get rich quick. This applies to both stocks and crypto. If someone promises that you'll quadruple your money in a week, it's probably a scam. Truthfully, building wealth takes time and patience. Aim to grow your money slowly and steadily, rather than chasing unrealistic shortcuts. Now, let's bring this discussion to life with some real examples. For stocks, imagine investing with $1,000 in Amazon 10 years ago. Today, that investment would be worth tens of thousands of dollars without any flashy or risky moves. For crypto, on the flip side, consider Bitcoin's meteoric rise from less than $1 to over $60,000 in the span of 10 years. Those who bought in early and held on made life-changing amounts of money. But many also lost out when the price crashed. It's important to remind ourselves that investments, whether in stocks or crypto, are just one part of a bigger financial plan. You'll also want to maintain an emergency fund, pay off high-interest debt, and have a budget in place before diving headfirst into the market. Think of investing as planting trees. Some will grow fast, others take time to develop strong, deep roots. The key is consistency and patience. So, what's the verdict? Is investing in stocks better than crypto? The truth is, it depends on you. Stocks provide stability, predictable growth, and a proven track record, making them ideal for long-term wealth building. Crypto, while risky, offers the possibility of high gains for those willing to tolerate unpredictability. The smartest strategy might not be choosing one over the other, but finding a way to balance both in your portfolio to meet your goals. Here's your homework. Research more about both stocks and cryptocurrency. Start small. If you're new, you don't need to invest big amounts right away. Align your investments with your financial goals and risk comfort level. Thank you for watching. If you found this video helpful, hit the like button, subscribe to the channel, and share with your opinions in the comments below. See you next time, and happy investing.